Me right now is Tennessee Senator and member of the Senate Banking, Appropriations, and Foreign Relations Committees, Bill Hagerty, is with us. Senator, it's great to see you. Welcome back.
Good morning, Maria.
What are your expectations of a bill reaching the Senate in terms of debt negotiations? This morning, a number of Wall Street analysts are writing about tomorrow morning's meeting with Kevin McCarthy, the president, and the Senate leadership as well. And what we're hearing is that there are three issues that form a potential term sheet. That term sheet could include a clawback of unspent COVID-19 money, energy permitting reform, both fossil fuel and green energy reform, and caps on future discretionary spending growth. What are your thoughts in terms of potentially getting a deal done?
All of those are eminently reasonable terms, Maria, and I think the American public supports all of those. If you think about it, the unspent COVID funds should be a no-brainer. I mean, the COVID pandemic, finally, even this administration has admitted that it's over. So those funds should come back. One of the things that I would have hoped to see on the table would be the unspent and unallocated debt relief funds, if you will. The student loan debt relief that Biden has provided that I think is unconstitutional, that most Americans think is totally inappropriate. That's about $460 billion as well. I'd like to see that on the table.
I want to get your take on the backdrop here, because obviously there's a lot of worries about the banks. Senator, your Democrat colleagues are blocking your legislation, the Stop Fentanyl Border Crossings Act. I want to get to that in a moment, because before we get to that, you've also introduced legislation to relieve stress on the banking system. You say it could restore confidence in America's financial sector. So I want to ask you specifically what your bill does. This is the Depositor Protection Act of 2023.
Certainly.
But before you explain it, let me give you a sense of what the former president and CEO of the Dallas Federal Reserve Bank told me on Friday when we discussed potential changes at the FDIC to help this stalemate in the banking sector as well. Here's Robert Kaplan with me on Friday.
One of the things, by the way, I would do and propose now is raising the FDIC insurance level for business accounts, bank checking accounts, up to, say, $5 million, not savings accounts, but checking and transaction accounts. I think that would go a long way to put small banks on a more level playing field with too big to fail banks. They're not on a level playing field right now.
So, Senator, the issue here is that the small banks are in trouble, and the small banks need help. The credit tightening has been severe, and these regional banks, they are the banks that lend to 90% of small business, as you know. Is that something that you would consider supporting what Robert Kaplan just said?
Robert is exactly right. It's not a level playing field, Maria. And you've got the too big to fail banks that have a huge competitive advantage. What my bill does is actually takes care of these wholesale accounts significantly. It takes it up to $100 million in terms of wholesale accounts. These are accounts that medium-sized businesses might have to manage their payrolls, et cetera. If those accounts leave banks, that'll create significant pressure on the system. My bill actually addresses that. On the retail side, what it does is it allows these banks to go ahead and spread their accounts across basically have reciprocal accounts with other banks. And it doesn't require a raising of the FDIC limit there, but it allows more reciprocity, more flexibility. It also provides for more bank mergers, makes it easier. The Fed has not been doing a good job in terms of approving these in a timely fashion. When a bank is well capitalized, it's well situated, if banks are trying to merge, this makes it easier, it facilitates that process as well. What we have is a situation where in Washington, the system is sclerotic, very difficult to manage, and this will improve it dramatically.
So the FDIC is now requiring banks to pay a special assessment for cost of covering uninsured deposits. At Silicon Valley Bank and Signature, the mega banks have the biggest burdens there. What are your thoughts on what the FDIC is doing? And is this going to be one of your topics to discuss at the Senate Banking Committee hearing? We know that examining the failures of Silicon Valley Bank and Signature Bank, the Senate Banking Committee hearing is happening this week at 10 a.m. On Wednesday, you've also got the House Financial Services hosting those executives from SVB and Signature.
Maria, this is a very expensive process that the FDIC is managing. They're going to impose a special assessment across banks in the American banking community. They're in the process right now of deciding which banks are going to absorb this. They have assured me that the smaller community banks will not bear an undue burden here. I'm waiting to see how that unfolds, but I think every bank in America is concerned about the fact that the FDIC allowed the auction to fail, made it immensely costly to the American public, and this spreading of the burden, if you will, is going to impact American taxpayers, because I fully expect that this cost is going to be passed right along to those customers of the banks that are going to be significantly impaired by this special assessment.
Yeah, so to say that, taxpayers are not impacted by anything happening around Silicon Valley Bank is wrong.
Indeed.
I'm glad we addressed tomorrow's meeting on the debt negotiations as well as this FDIC idea. I want to get your take on the border as well and your Border Crossings Act. The day before Title 42 expired, you also recently grilled Biden's nominee for U.S. ambassador to Jordan about sending Jordan money to help them build a border wall. And yet we have no border wall continuing our construction here in the U.S. Let's watch a bit of that. Watch.
The omnibus last year provides for at least $150 million for border security in Jordan. It's a large amount of taxpayer dollars. And if you think about the purpose of this, is to provide physical security, to keep people from illegally crossing into Jordan. Isn't that correct?
It is to provide physical security, to stop drug smugglers, to deal with the threat of Jordan's neighbor, Syria. Obviously, the conflict there continues, and it's a dangerous neighborhood.
Senator, square this circle for us. You're saying that U.S. taxpayers are sending money to help protect the border in Jordan, but we're not doing anything about the border in the United States with Mexico.
It's just amazing, the hypocrisy. Maria, you've pointed this out multiple times before. But Biden's own nominees are acknowledging the fact that physical security works. In fact, they're spending U.S. taxpayer dollars in foreign countries to create border security for those countries. And as this nominee said, to prevent drug smuggling, which is the biggest health threat that we have in America for people the ages 18 to 45. That's the #1 killer of Americans here in America, Americans here in our country, I should say, in that age group. And yet we're not going to put any border security in place for America, yet we're willing to fund it in Jordan.
Well, the president said it's better than expected at the border.
It's unbelievable because the expectations have been set so low, Maria. What we've seen is a massive flood of humanity coming across that border. It's a crisis that you've covered better than anybody. But the drug smuggling that's stepped up, the number of people that are dying here in America every day, thanks to fentanyl, is something that this administration wants to ignore. Yet again, they're willing to fund border security for a country like Jordan to prevent drug smuggling there. It's amazing.
It's very disturbing, Senator. You've got a lot on your plate. We're going to be watching. Thanks for your leadership on all of the above.
Thank you, Maria.
Thanks, sir.
Thank you. Senator